Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with the 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
I got my tree up. For those watching in the video podcast, the tree is up. Perfect timing because it certainly feels like December, even in Wilmington. I mean, I had to wear my overcoat all day today. Usually it's like just the morning. By the afternoon, I don't need it anymore. Not today. It was cold. Did it actually get above 40? I don't even know. All right, welcome everyone. Wilmington Mortgage, Tuesday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Cralle, of course, loan officer, Town Bank Mortgage, right here in Wilmington, North Carolina, where we break down the top stories that are moving rates every single weekday in 15 minutes or less. And today's pretty simple. Not a lot of rate movement, kind of similar to what we saw yesterday. Going into the close, we got the 10-year up about 1 basis point. A little bit above that, kind of similar to what we saw yesterday. So everything's just kind of standing still as the Federal Open Market Committee began their meeting today. They will make their decision tomorrow. And we did get a piece from Nick Timiraos this morning, actually, Tuesday morning, saying that, yeah, they're probably going to move forward with that rate cut. But going forward is anyone's guess. And we did actually get some data this morning with regards to job openings, the labor market, which ties in directly to we know what the Fed is debating. That's the labor market. And so we did get job opening data from the Bureau of Labor Statistics. And while the headline number was not that surprising, when you look in deeper, you find some interesting data. So job openings, this looks at the final business day of October. We saw a slight uptick, barely, to 7.67 million job openings, final business day of October. That was up from 7.65 million in September. So not really a big move, but it was the highest level since May. So we've seen like a little bit of an uptick, which is kind of interesting because there is a concern about the labor market kind of deteriorating. And so you would think that job openings would be falling, not rising to the highest level since May. But that could be a little misleading in that, maybe people are listing jobs, but they're not really hiring people. And we're seeing that with the jobs data. We haven't gotten a jobs report yet, but we did see, private payrolls that are showing that there is not a lot of hiring going on. So these job listings could be somewhat misleading. And clearly workers are concerned about the labor market. That is evident in quits. So the total quits last business day of October fell to 2.94 million, down from 3.13 million in September. So kind of a big drop for numbers being that low. And in fact, that 2.94 million is the lowest number since April 2020. And we all know what was happening April 2020. And so I said, okay, well, if you remove the pandemic, because the pandemic is such this like data killer because everything just like collapsed in that couple months there in the heart of COVID. And I said, okay, when was the last time quits were this low? Have they ever been this low? And I think it was sometime in 2016 is when we saw data like that. So we are definitely seeing a slowdown big time. And people who are feeling confident in the labor market, they can quit their job and find another one. Because that's what that represents. When people are like, you know what? You can see that in the data that we get from ADP. So it shows, what the year over year pay increase is for people who stay at their job versus people who, got a new job. And it's like double what you see with people who stay. So that's a good way for people to get those pay increases is to jump to another, company who says, we want to recruit this person over. We want to win him over. We're going to give him more money. We're going to give him more benefits, whatever it may be. And so when people are like, you know what, that job isn't out there, either they think it's not out there or it's not out there, but either way, they're not going to quit their job. And so that is probably my biggest takeaway from this report. So yeah, job openings holding steady, highest level since May. But man, workers are not feeling good about this economy. The place where we saw the biggest drops in openings were accommodation and food services were down about 136,000. Healthcare and social assistance saw a big drop, 114,000 as well. And federal government was down about 25,000 as well. But like I said, the big takeaway to me is, man, workers are not feeling good about the labor market, which is once again what is happening right now, is the debate that is happening with the Federal Open Market Committee. We know there's a big divide, biggest divide probably since Volcker, since the 70s, early 80s, that we have seen this big of a divide on the Federal Reserve Board or committee about what is the bigger concern, inflation, labor market. And this says workers are not feeling good. So companies, like I said, they have these job openings. Are they superficial? Are they kind of just, oh yeah, we'd love to find this perfect candidate, but if the perfect person doesn't show up, we're not hiring. So how accurate are these job opening numbers? When you look at that quits number, you're like, man, people are feeling it in the labor market. So that's a very important takeaway, in my opinion, from this job openings report. Because once again, we don't have a jobs report. We're not getting one. I don't think we're getting one on Friday. And so what we have is sort of these ancillary reports that are giving us data. And so it's kind of, it's kind of a big deal to see quits fall that much. We're not seeing a huge reaction from markets because once again, we don't know how this is going to be interpreted because it was sort of conflicting data and that you have job openings rise with quits falling to a 5-year low. So the market needs to figure out exactly how this is going to impact the debate the Fed is currently having, which we'll have more information on tomorrow. Now, we know what the Fed's going to do. I mean, we already had sort of the CME Fed watch tool was like 90% yesterday that we were going to see a rate cut. So that's kind of been priced in. The problem is we don't know what's going to be happening. And that was made very clear by Nick Timiraos, a.k.a. the Fed Whisperer from the Wall Street Journal, who always kind of gives us an idea of what's going to be happening at that next meeting and sort of what is going on with the Fed, hence the term the Fed Whisperer. And as, he wrote, the final call will rest with Chair Jerome Powell, who appears poised to secure one being rate cut, one more rate cut, despite the unusual opposition. So he's saying we still have a big divide on the FOMC, but it's more than likely Powell is going to get that third rate cut, that December rate cut. So we are likely to see them announce a Fed rate cut tomorrow. However, what is going to be happening in 2026? That is anyone's guess. Timiraos wrote that, quote, the resistance to cuts has built among a group of policymakers who already saw a weak case for cutting at the past two meetings. These officials are uneasy because inflation has stopped declining toward the Fed's 2% target. They worry interest rates might not be enough to push it lower. We know that. We're seeing that in the data. And we're seeing that in speeches. We're seeing it in arguments being made. There is definitely a concern about that. And then, of course, this is all being made even more complicated by the fact that we're entering 2026 and it's going to be Powell's last year. I mean, he has less than a year left. He's going to be replaced in May. And the question is who's going to take his place. And it looks like Kevin Hassett is the front runner by a pretty wide margin. And so what impact is he going to have? And I did see a piece in the Wall Street Journal in which Hassett said he was not going to allow political pressure to dictate what he was going to do with rates. Maybe senators that could be concerned about his appointment are going to think he's going to be a rubber stamp. And I'll tell you, Steve Mirren, who's on the board is not helping that because, Steve Mirren, who was economic advisor to Trump, gets appointed to fill the vacancy from Kruger. I think it was Krugler, who left the board, kind of surprisingly. Then we found out it was because of financial disclosures. So she leaves, and then Trump appoints Steve Mirren. He gets confirmed, gets immediately on the board, and immediately is like 50 basis point cut. Everyone's voting for 25. You got people voting against a cut. Majority 25 basis point, and then you got Mirren who's like 50. I guarantee he's gonna say 50 again. And there's no really solid argument other than everyone's like, yeah, Trump wanted him to get on the board and do that. And so that's definitely going to hurt Hassett. And I think that's why he's getting ahead of it, saying, hey, listen, I'm not going to bow to political pressure. I'm going to do what the Fed is supposed to do, which is, their dual mandate, which is employment and inflation. And we are going to make sure we are doing things to maximize employment and minimize inflation, at least to its targets rate. You don't want no inflation. I mean, I guess it'd be great if we had no inflation to some extent, but we're talking within that 2% range. And so, yeah, I don't think Mirren has helped him. So Kevin Hassett, I think, has to kind of get ahead of these arguments where people are going to be like, you're just going to get on the board and just, because Trump has said he wants rates at 1%. That's where I think he said this is where he wants the Fed funds rate. A lot of people think that he's talking about interest rates, which, I get. But when he was president, I think the Fed funds rate was 1%. His first term, we were still kind of coming out of the 2008 debacle. And so we still had a very, very depressed Fed funds rate. And so he wants the Fed funds rate at 1%. So you assume at a historical sort of norm spread between the 10-year and 30, he wants a 30-year at or look at it where it is now, about 250 basis points. So 3.5% mortgage, which great. I'm all for it. But that could be a little bit of a problem from the inflation side. So yeah, Hassett has to get ahead of that. I think that's why he's doing it because, like I said, I don't think Mirren's doing him any favors by voting 50 basis points every time they have a vote about what's going to be happening. I did also, speaking of the Fed and Trump and kind of all of that, there was a great piece that's in the newsletter. I linked to it in the New York Times, where it seems like, despite the fact that the Supreme Court's probably going to rule in Trump's favor on the firing of some, I think it was the National Labor Board, I think was one, and then the FTC, I think was another, that they're still going to sort of look at the Fed as being a different entity than some of these, which it is, than some of these other organizations that Trump is saying we're going to remove the people from them. We're going to appoint our people. And the Fed being sort of an independent body is looked at as being differently. And so pretty good piece in the New York Times. So yeah, tomorrow's a big day. We got Fed decision, dot plots. So we're going to have an idea of what the committee thinks is going to be happening in 2026. And then we got Powell's press conference, which always important, but it does feel like it might be a little bit more important going forward. That's, I think, why markets are somewhat stalled. So we will see. All right. You guys enjoy the rest of your Tuesday. I'll see you back here Wednesday do my best to kind of wrap up what happened with the Fed. But yeah, that's it. You guys enjoy your day. Enjoy your Wednesday. And remember, as always, do not wait to buy real estate. You buy real estate and wait.